Do you have more than one job? Have you recently got married? Your paycheck's taxes are withheld differently when you undergo major life changes. U.S. taxpayers typically pay estimate income tax through the year and account for it on the tax day of the subsequent year under the pay-as-you-earn approach. Federal law requires employers to deduct a portion of their employees' regular paychecks to withhold part of their income for taxes. All new employees are required to fill out a Form W-4 to determine how much withholding they will receive. Employers rely on this information to calculate how much withholding they will receive. Withheld taxes are refunded to employees when they are too high. In a year, however, a lot can change. A tax withholding amount may need to be reversed in certain circumstances. Hello guys, welcome to my channel. It's me, Sandra here. I just purchased a new home and was wondering what I should change on my W-4 form. I did some research and I would like to share with you. In today's video, we will discuss when we should adjust W-4 withholding. Events that trigger a change include tax withholding amounts are determined by the following factors. Your W-4 should indicate whether you are married or single, income earned by working either one job or multiple jobs. Extra funds may be withheld if you wish, whether you qualify for any allowances. The birth of a child or the loss of a spouse's job can immediately impact your tax situation. In these situations, withholding should be adjusted to avoid owing a higher tax bill. Marriage. Taxes may be affected in two ways when you file a joint tax return with your spouse. In the first place, your overall household withholding may increase if your spouse earns an income. You may also benefit from separate filing if your spouse does not work. If your spouse does not work, your overall withholding may decrease. Divorce. You may have to pay alimony after you divorce, which can affect your household income. With the Tax Cuts and Jobs Act of 2017, alimony has received a different tax treatment starting in 2019. Unless there are any changes in tax law, alimony payments are no longer tax deductible for the payer, while recipients are no longer required to report alimony payments as income. Birth or adoption. As a result of birth or adoption, you will have a dependent in your household, which will eventually lessen your overall tax burden to compensate for the extra expenses of raising children. If you want to maximize your credits and deductions, consider reducing your withholding immediately. Purchase of a new home or other major purchase. When you purchase a home, you can update your withholding in anticipation of tax benefits. Several tax credits are available to first-time home buyers, and the IRS updates its list of approved tax benefits frequently. In addition to education credits, dependent care expenses, medical expenses, and charitable contributions, you are also eligible for large deductions and credits within a year. Income from non-wage sources increases dramatically. Withholding must be adjusted for non-wage income from side businesses, stock dividends, and interest income. Stocks or cryptocurrency sold for a profit, for example, are subject to short-term and long-term capital gains, depending on how long you held them. Having two jobs at once. Households with two incomes and individuals working multiple jobs are more likely to experience withholding disparities. In particular, this applies if each withholding certificate specifies the amount to be withheld for each job. In 2021, a taxpayer who works two jobs earning $25,000 each will be taxed at 22%. In spite of this, independent withholding certificates may assume the taxpayer is taxed at 12%. You can also claim allowances you previously held off on if you lose a second job, thereby reducing your withholding on the remaining job. Withholding the right amount. Withholding calculators are available on the IRS's website. Moreover, both the instructions for Form W-4 and the separate instructions are included with the form. We have outlined below a step-by-step guide to revising your tax withholding. You can estimate your federal income taxes using the IRS Online Tax Withholding Estimator. Consider contacting your employer about revising your federal income tax withholding if your taxes have changed significantly. Alternatively, your employer may direct you to an electronic platform where you can complete the W-4 form. Complete Step 2 of Form W-4 if you have multiple jobs or both you and your spouse work. Following this step, we use the information we collected. Complete Step 3 of Form W-4 if you have dependents. The dependents you claim reduce your income in this step. Having all taxes withheld on one W-4 is an option if you work multiple jobs. Instead, for a Form W-4, enter the amount that would have been withheld if you had been employed by a different company. If you choose to opt out of withholding on your job, be sure to let your employer know. It is possible to further reduce your tax base if you anticipate receiving additional tax benefits during the year. The amount you do not expect to be required to pay should be entered on Step 4 of Form W-4. The purchase of a first home, for example, qualifies taxpayers for additional tax deductions, which must be intentionally included on the W-4 on this line. Step 4 allows you to withhold an additional amount if you anticipate paying more taxes. Make sure the appropriate changes have been made to your revised form before submitting it to your company. Compare your previous and current pay statements. 1 or 2 pay cycles may pass before changes to your withholding amount are made. Tax withholding, is it better to withhold more or less? Tax withholding is better than paying taxes as part of your tax return if you want to avoid paying taxes. Withholding more than you need is a lost opportunity. However, if you overpay your taxes, you lose the opportunity to invest those funds and potentially grow your wealth. My paycheck will be affected if I change my withholding. Your take-home pay will change if you change your tax withholding, but your gross pay will remain the same. The amount you take home from your paycheck will decrease if your tax withholding is increased, while the amount taken home from your paycheck will increase if your withholding is decreased. Withholding amount update, how do I do it? The employee's withholding certificate, which is Form W-4, can be revised if your employer withholds taxes on your behalf. Conclusion: a person's withholding status may not need to change significantly for years. Refiling the W-4 is worth doing when life changes do occur. You will be refunded if you overpay the government during the year. A large bill may surprise you if you pay too little. Okay guys, thanks for watching. Subscribe to my channel for more future updates. And I will see you soon.